Oh, thank you, Dee. Yes, 10 years of D50 this year. Now, Deirdre, there is growing conversation among the CEOs of companies that have graduated from the Disruptor 50 list about the tech industry shifting away from Silicon Valley. Stripe CEO Patrick Collison tweeted that 74% of Stripe's hiring was outside the Bay Area and Seattle last quarter. That's up from 39% just 2 years ago. Airbnb CEO Brian Chesky responded on Twitter, "Yep, the place to be was Silicon Valley. Feels like now the place to be is the internet, which is everywhere." Coinbase CEO Brian Armstrong adding to the conversation that 89% of Coinbase's hiring in Q4 of last year was outside Silicon Valley, up from 30% 2 years ago. Now, these CEOs are pinpointing a growing trend. For the first time in more than a decade, the proportion of seed and early stage capital invested in Bay Area startups this year is on pace to drop below 30%, down from more than 40% in 2014. That's according to PitchBook and Steve Case's Revolution, a firm that invests with the thesis that the next great startups are outside coastal tech hubs, what he calls the rise of the rest. Bay Area investors are increasingly looking elsewhere. Over the past decade, they've invested over $24 billion in seed and early stage companies in Los Angeles, nearly $6 billion in early stage companies in Seattle, over $4 billion in Austin, and $3 billion in the Washington, D.C. area. Now, we have seen this trend play out in the Disruptor 50 list. Last year, 29 of the 50 companies were outside of Silicon Valley, and it's a trend likely to continue on this year's list. The nomination process is underway, so to nominate your company, scan the QR code that you're seeing on the screen right now or go to cnbc.com/disruptors for more information. Guys?